Hello and welcome to Trading Strategy Testing channel. Here we test the most common trading strategies out there to see how successful they are and whether you should risk using them to trade. All the strategies will be tested 100 times so we can see how much money we could make. We will be using a 1.5 risk to reward ratio, which means for every $1 risked, we could either make $1.5 as a profit or lose $1 if the trade is not successful. The start in capital is $1,000 and we will be testing on the Euro-USD currency pair. We have many strategy testing videos coming up soon. Feel free to like and subscribe to our channel so you won't miss any updates. In today's video, we are going to test a strategy suggested by Maria Gillen. She wants us to test the Bollinger Band, which is a popular indicator among scalpers. Thank you, Maria, for your request, and we will be glad to test the indicator in this video. And regarding the best days for trading, we will answer this question at the end of the video. Feel free to leave a comment highlighting a strategy that you want us to test or simply including a question about trading. We will be more than happy to answer the question either in comments section or by making a video about it. The Bollinger Band indicator is a technical analysis tool defined by a set of trend lines, plotted two standard deviations, positively and negatively, away from a simple moving average SMA of a security's price, but which can be adjusted to user preferences. The indicator was developed and copyrighted by the famous technical trader John Bollinger. It is designed to discover opportunities that give investors a higher probability of properly identifying when an asset is oversold or overbought. It is always recommended to trade in the same direction of the trend. The trend is your friend, and trading against it could lead to major losses, especially when you are at the beginning of your trading journey. We will use the 200-period exponential moving average to define the direction of the trend. The 200 EMA is an important level that gives us a clear image about the price action, as well as the direction of the trend. We will be looking for buy opportunities when the price is above the 200 EMA and sells opportunities when the price is below the line. The Bollinger Band consists of two lines, the upper and the lower ones. Our strategy is simple. When the price is above the 200 exponential moving average, we will go long as soon as the price hits the lower band's line. On the other hand, when the price is below the 200 EMA, we will only look for sell opportunity and we will go short as soon as the price hits the upper band's line. High-quality signals exist on all time frames, and traders are making money on virtually every time frame you can imagine. However, the short time frames such as the 1 and 5 minutes could showcase various wrong signals, especially when the market is consolidating or at a high volatility stage. If you are using short time frame, it is strongly recommended to have a look at the 1 hour and the daily chart for a confirmation in order to increase the odds of success. In today's video, we will test our strategy on the 15 minutes time frame, which is my favorite one because it gives a clear idea about the direction of the trend and it is short enough to spot important pullbacks, especially if you are a scalper. Let's start testing now. We will run 100 tests and record the result on our Excel journal. It is important to test your strategies for at least 500 times before you jump into your real account. All the trades should be recorded in a journal so you can go back at the end to understand some of the factors that made you lose some trades. A successful strategy should be twisted from time to time to accommodate the existing market setups. Feel free to let me know in the comments section if you want me to make a video about my journal trading process. To support us, kindly like and subscribe to the channel to encouraging us testing more strategies. Trading Forex can be a great way to diversify a broader portfolio or to profit from specific FX strategies. Beginners and experienced Forex traders alike must keep in mind that practice, knowledge, and discipline are key to getting and staying ahead. Before you enter any market as a trader, you need to have some idea of how you will make decisions to execute your trades. You must know what information you will need to make the appropriate decision on entering or exiting a trade. Some people choose to look at the underlying fundamentals of the economy as well as a chart to determine the best time to execute the trade. Others use only technical analysis. Whichever methodology you choose, be consistent and be sure your methodology is adaptive. Your system should keep up with the changing dynamics of a market. If you want us to test any strategy in particular, feel free to let us know in the comment section. Forex risk management comprises individual actions that allow traders to protect against the downside of a trade. More risk means higher chance of sizable returns, but also a greater chance of significant losses. Therefore, being able to manage the levels of risk to minimize loss while maximizing gains is a key skill for any trader to have. Selecting the right position size, or the number of lots you take on a trade, is important as the right size will both protect your account and maximize opportunities. To select your position size, you need to work out your stop placement, determine your risk percentage, and evaluate your pip cost and lot size. Using stop-loss orders which are placed to close a trade when a specific price is reached is another key concept to understand for effective risk management in Forex trading. Knowing the point in advance at which you want to exit a position means you can prevent potentially significant losses. Traders should use stops and also limits to enforce a risk-reward ratio of 1:1 or higher. For 1:1, this means you are risking $1 to potentially make $1. Place a stop and a limit on each trade, ensuring that the limit is at least as far away from current market price as your anticipated stop level. The results will be shared soon in this video. While waiting, feel free to like and subscribe to our channel so you won't be missing any updates in future. We have got plenty of trading strategy testing coming up soon, and we are currently working on a video that will discuss one of the most common issues or challenge faced by new traders, and it was one of the 2 elements that made me become a profitable trader 4 years ago. The video will be released as a celebration for our first month on YouTube and the 1,000 subscribers family.
A few minutes later.
We have just finished the 100 times strategy testing, and before we release the results, I would like to answer the question that Maria asked us about the best day for trading. Based on my experience, I always stay away from the market whenever there are critical news affecting majors, as the market might be unstable and most brokers would increase their spreads, but if you do your homework, you will be fine, as long as you have a stop loss set. Other than that, I usually avoid swing trading on Monday and Friday, as the market might not have a clear trend or direction. I hope this answers your question. We always welcome any question in the comments section, so feel free to ask as it is our main source of ideas when it comes to strategy testing videos. It is now time to release the results of our experience. We have managed to make $622.6 as a profit and recorded a percentage of 52% success rate. We started our experience with $1,000 initial balance and end up with $1,622.6. We can say that the strategy is successful if we apply a 1.5 risk to reward ratio. However, we have recorded 5 consecutive losses. That's why even though the strategy seems to be working, but you are not advised to use high volume which exceed 2% of your account to avoid getting a margin call. Finally, I would like to recommend using the Bollinger Band strategy for new traders as it is simple and would work at the end of the day, despite the consecutive losing trades that we might have along the way. The strategy will be much more efficient if it is combined with the price action strategy and respects the key levels such as the support and resistance, as well as the high demand and supply zones. Let us know in the comments section if you want us to make a video about these topics in future. Thank you for watching and happy trading.